Bueno chicos, bienvenidos todos a un nuevo podcast. En este podcast vamos a estar en Titans of Tomorrow. Es un podcast inglés que está establecido en Dubai. Van a estar hablando traders como Alex García y Waqar del grupo WWA. Hablando realmente de lo que es la verdad del Smart Money Trading, el concepto en general y cómo funciona realmente, ¿no? Entonces va a tener muchísimo que aportar a la comunidad y va a estar en inglés, ¿vale? Voy a poner sus títulos en inglés. Yo entiendo el inglés, pero no al 100% como para poder traducirlo todo. Entonces voy a poner sus títulos en inglés y no sé si puedo tener en español, voy a mirar, pero creo que van a ser en inglés, sí. Totalmente en inglés. Entonces, nada, vamos a estar traduciendo lo que podamos también, aparte de poner sus títulos y a escuchar qué es lo que nos tienes que decir. Así que nada, chicos, empezamos.
I'm sure you've noticed where over the space of a year, you'll have a certain type of trade that you saw it 6 months ago and you saw it today. That is a repeatable trade and everybody can find that. That's not hard. You've got to be patient to put away the opportunities that look like that. That is the difference between, I think, a good trader and a great trader. It's that impulse control to say no. And I think a roadmap for a trader actually, it's a very simple roadmap, which is
Están teniendo un fallo con el sonido.
Welcome everyone
Ahora,
back to the
ahora sí.
Words of Wisdom podcast. And we are joined by two incredible traders and two great friends of mine as well. We have seen one of them on the podcast before actually, and they are the founders of WWA. Last time we had WW, this time we got WNA. Mr. Alex G is with us, a real trader, incredible trader, and I can't wait to go into his journey as well. And we are here with the one, the only Mr. Waqar as well.
let's go.
Thank you very much.
We're show residents. This is maybe my
That's
third
it. Well,
appearance.
thank you for hosting me in your studio.
There we go.
That's
Yeah.
it. I'm a guest on my own podcast. I don't know how that works. But how are you guys doing?
All good, man. It's nice to see you and your crew now in Dubai. And I'm sure we're going to have a fun week with a lot of activities planned. How many episodes are you shooting in the next month?
So when I came out here, I had like 20 in
You're
the
a machine,
diary.
man.
Now I've got 40. So
That's
it's
a year.
it's a good and bad problem because now I don't know. I've already got podcasts that's coming out, let's say this Sunday from May. So it's a bad problem in one sense, but I think it's part of the game, you know?
There we
It's
go.
part of the game. And then the issue that happens is that you film a good episode like this and you want to get it out soon, but then you got all these other podcasts there and then
backlog.
you bring it out sooner. Then this one that was in April still there, sat there, ready to come
Still
out.
waiting for it.
Yeah, and people messaging me, when's it coming
When's
out,
it
man?
dropping?
When you dropping my episode, man? I'm just like, yo, I'm so sorry. But hey, we'll go straight into like you guys obviously starting a podcast, right? And then we're going to get really heavy into the trading, which I know people are really excited for.
Yeah, I wanted to skip the life story stuff and we just go deep into real trading topics.
Yeah.
But yeah, I mean, I always give you credit. I'm going to do it one more time. Man, the podcast started because of you and it was all the encouragement you gave us. And it's 2 months in now and it's blown up way beyond whatever we thought. Because I know I've got a lot of friends that do podcasts and it's always a 1 year, 2 year grind
Yeah.
to really hit that 5K mark. But you helped us give us a bit of traction in the beginning. Then Raja came on, and then it's snowballed. So it's been a lot of fun, man. And we're trying to fill your shoes. That's what we're trying to do.
No, never. I told you guys though. I said you guys would be great at it. So I wasn't surprised at all when we started seeing the guests, the caliber, the great questions and the response. You know, I already knew it was going to happen.
Yeah, I
you
think
know?
it's been great because we're very passionate about also business. I know today we're going to speak more about trading, but we're also very passionate about business. So I think it's very cool also to meet all these people, the stories they have, the networking we've been doing. So it's been a great journey, and we're like 8 episodes in. So can't wait to see.
Did you ever notice in your views? I know you're only traders, but there's the more famous influencer traders, and then the less known ones those ones are maybe more knowledgeable depending on the case. On our side, it's like we have a legit billionaire, lowest views. We have people worth 100 million, lowest views, and then then the ones that are social media famous, those episodes blow up. Which is cool to see. But then I feel like the ones that are billionaires are left out. Do you find the same?
I do find the same. Like, obviously, the influencers definitely get like a bigger traction, bigger push, because they're pushing their audience there, so it's kind of like easier for them to do that. But then I have seen the occasional time where they're not an influencer and the episode does very well. So it's really interesting to try and find the formula of why that happens. Why does that take place? I still haven't worked it out properly yet. I feel there's an element of like the story that's being told, if people can resonate with it. Also like the thumbnails, the quality, these are just little intricacies. It's kind of like trading in terms of like, it's not like one holy grail you find and then you have a blueprint for life. It's like these little intricacies that when put together creates that traction, creates that result, the positive result we're looking for. So I have seen it. And I've said it's sad to see that though on your guys' side, because obviously you've got some incredible guests and the guests are providing such a value. And I think it's just down to, I think it was just because you had myself and then Raja on first. It gave you this push of traders.
Base,
So then when obviously you start to introduce non-traders, they're just like, oh. But the reality is, I think people should really recognize that in terms of value, in terms of success, it's pretty universal. So if there's someone who's a billionaire, the knowledge they have is going to help you in trading without even realizing it, because the numbers they're used to, the numbers they play with, the journey they've been through is going to be extremely powerful for anyone, let alone obviously a trader as well.
There's that thing of you have the universal knowledge, as you said, which is habits and ways of becoming a good trader, also transcends into just general life and success. So that always helps. You don't have to listen to a trader to gain that knowledge. But then there's the other side, which is, and the example I always use is when people have a tennis coach, you want him to teach you, it's from the book Mastery by Robert Greene. It's like you're playing tennis and he's teaching you how to do a backhand, he's teaching you technique, he's teaching you the form. And then that's what you're learning directly from him. But you also have another level of learning, which is the subconscious side, which becomes you don't know what you're just watching him and you're slowly seeing, okay, that's how he's rotating his wrist or whatever. It's that subconscious learning. And I think that's what's the benefit of having these really high level entrepreneurs on our side, where you have a billionaire and a lot of the direct messages are maybe not that relatable because we don't have a conglomerate and he's in like 20 industries. So we can't relate or even directly apply his words, but just seeing the way he's on it, how the level he thinks at, his vision, the way he operates, how he manages his day, the way he treats his family, those kind of things we can all subconsciously learn from. And I think that's the benefit of having these crazy entrepreneurs from different fields. Maybe you can't learn anything directly, but it's indirectly being exposed to that kind of person.
There's a lot of things I believe as a trader that you need to also be getting from other people or other spaces. So for example, when I started my journey, English is not my first language, right? So I'm not going to be able to communicate as good as if I'm speaking on Spanish. But at the same time, I was listening to podcasts about business. Therefore, I knew one day I will be able to speak a bit better on camera. I'm still improving because it's not my first language, but you get so a lot of things like this, like Waqar was saying on that podcast, for example, our friend Saurav from Bangladesh, as he said, we don't have a conglomerate, but the way he executes things, the way he's on his day-to-day, always on there, you can say, okay, if I want to be a trader, it's very good to be on the charts, but what I'm doing off the charts, am I building positive habits? Do I have a good routine? Am I going to sleep early or late? Or what's the time zone that I want to be trading? All these things also come into place, I believe, to have a better skill. But not only that, it also is learning to how these people communicate. You also need to be a good communicator in life, because if you don't know how to sell, like in the future, you might be able to have a fund, but if you know how to sell yourself, if you know how to sell your portfolio, you might not be able to even get money.
O sea, lo que está diciendo aquí realmente es que es importante cómo estás operando en el chart, en los gráficos, pero es mucho mayor importante qué estás haciendo fuera del chart, ¿no? Fuera de los gráficos, qué tipo de hábitos tienes y cuáles son tus rutinas, ¿no? Para tener ese estado mental correcto.
Just trading is enough. But then having the skills of marketing, even if you don't have a product you want to market, as you say, marketing yourself is still very important. And I feel like a lot of traders are very introverted because they're just behind a screen in their home, in their office, and that's it. And so they don't have that sort of interaction with other people, and they especially don't have the experience of pitching themselves. And as you say, pitching a track record. So I think it's a very, very valid point, because I can imagine, people want the investors, but they think just having the track record is enough. But investors get pitched all the time. People with money get pitched 24/7. And they, if you're going to come and say, I've got a track record, they can say, okay, what's new? What's different about you? You tell me why I should invest into you regardless of this track record.
Yeah, why I should trust you as a person.
That's it. And I think a lot of people don't think in that way. And that's why it really relates back to what we were talking about in terms of, you're having these high-level guests on in different industries, but they have lessons that can definitely be applied to our industry, inside trading, but people just don't look beyond the surface. And I feel like, when we talk about the marketers in our space, that's the problem as well. People don't look beyond the surface. They see the shiny object, they see the shiny car, the shiny iced out Rolex, whatever it may be, and that's all they see. This is the image of success, but the reality behind it all in terms of trading, as you guys know, is much deeper than that.
Yeah. And just one thing to add in this, and that's what I believe the reason why if you become just a good marketer, you will reach a certain amount of money, and if you become a very good trader alone, you'll reach.
Aquí, básicamente lo que ha dicho aquí es, que tú por internet, en redes sociales, puedes ver el Lamborghini, la mansión, el Rolex, el yate, los pibones, ¿no? Etcétera. Pero que realmente el trading va mucho más allá que eso, ¿no? Mucho más allá que ese ruido. Yo como trader, como servidor desde hace 5 años, pues puedo corroborar lo mismo, ¿no? Que el trading no son... Sí, claro, eso es un resultado y es fruto de lo que es el trading, ¿no? Y la disciplina y esfuerzo que le has dedicado diariamente durante años, ¿vale? Porque esto es cuestión de años, no es cuestión de un mes o dos. Ahí es cuando tú vas a obtener esos frutos, ¿no? Pero entrar con la mentalidad de que en tu primer año te vas a comprar un Lamborghini Huracán haciendo trading sin haber tocado una gráfica en tu vida, pues es algo que no es realista, ¿no? Entonces, el trading va mucho más allá de lo que veis en redes sociales. El trading supone mucho más de lo que enseñan, por ejemplo, colocando una operación viendo un partido de fútbol. Eso no es trading. El trading se basa en rutinas, en horarios, en hábitos, en un plan, en una gestión, en un registro, en unas probabilidades. No se basa en meter un trade viendo un partido de fútbol o viajando o metiendo un trade en un avión, ¿vale? Se puede hacer, sí, pero eso te lo hace la experiencia, no el primer mes. Es la diferencia. Entonces, seguimos.
Reach a certain amount of money, but once you merge everything together and once you understand about business, how to communicate yourself, how to network with people, there's a lot of people that don't know how to properly network, right? They go out, we spoke about this on private, but they go out and they don't know how to behave when there's people that they don't know. And all these small things also add a new part into when people come to Dubai and say, oh, you need to meet these guys. But why do they say meet these guys? It's because they know how to hold themselves on certain situations, and all these combined things is what makes like a difference to then have an edge, I think, in your life.
Yeah, definitely.
I like the thing you said of people using lifestyle as a status symbol, which it is. A watch on a car, whatever, is a status symboling or virtue signaling. But from the novice viewer's perspective, you get caught up in it and think, okay, this because he has this, he must be that, and you make it into that formula, and you look beyond it. But when you look beyond that, and you think, okay, well, what is a true representation of success? I think it boils down to just a few things, and it's synonymous across industries, and I think it's skills, traits, and beliefs. The skills you have in the markets, that's for the trader. The beliefs you have, if you have any limiting beliefs, that kind of thing, that's the internal side of emotion. And then traits, are you disciplined, consistent, and so forth. And that's why I think to have a paradigm shift, which I think everybody goes through, that's either very quick through a aha life-changing moment. You have a car crash, you're bedbound, you get a life-threatening disease, and then you have this awakening and you change your ways. That's not always the most common way. The other way is, you slowly change your ways of thinking, the content you consume and all of that, and that will slowly change your path in life. And I think that comes from consuming content, and doesn't mean internet necessarily, it can be books or whatever. But for myself, I know that, and people around me, the people that have kind of taken entrepreneurial routes and done well, it was all through these days on the internet. It's not necessarily books or anything. For my degree, I had lectures and professors and all of these things for 6 years, but I learnt all of it on YouTube, actually. My whole dental degree was on YouTube, and even in school, actually. And I think that is also for business. If you want to become a good trader, you don't necessarily need a million courses. But if you just watch enough YouTube content, there's enough out there for free that then when you have the traits and beliefs, then you can start to piece that together to become a profitable trader, or you can start to get good at business just by watching the right people, Alex Hormozi and so forth.
Aquí de lo que está hablando, y esto sí que también estoy de acuerdo, es que no te hacen falta invertir miles, o en este caso habla de millones, ¿no? Miles o cientos de miles de dólares o de euros en la estrategia perfecta, porque o sea, aprendes desde vídeos de YouTube. Si eres inteligente y te educas desde las personas adecuadas en el sector del trading, puedes aprender muchísimo, y en base de eso, con tus primeros trades, obtener tus primeros registros, ¿no? Si te tomas esto de forma seria y lo haces así, ¿no? Entonces está bastante interesante.
And I think that's the way to navigate it, is you watch enough videos, eventually you start to think different, act different, approach challenges differently. And that's why I think we wanted to have that kind of podcast, because the amount of podcasts I've listened to is, I don't know, hundreds and hundreds. And the amount of YouTube videos I've watched on self-development, self-help, you know, you get categorized as a self-help junkie. And I've seen people label themselves as that. I just consume, which I don't think is wrong. I think is beneficial, with the caveat that you then later on take action on what you've been consuming. Same for your viewers now. If they're just religiously watching your content every single week, sometimes you have phenomenal guests, sometimes not so much, because they might be a marketer or whatever. But eventually you consume enough of words of wisdom content, you will start to get into the mind of how traders at a high level think, what they operate, what are their skills. Maybe you don't get because you're not looking at chart breakdowns, but you're going to start to understand their traits and beliefs and how they tackle problems. And I think that over an extended period of time, I think your viewers are going to become better traders just by viewing your stuff.
Yeah, definitely. It's interesting what you said there, though, because it's like you said, like you can just consume the content, but I think there's a difference. Let's say like Iman Gadzhi, for example, or Alex Hormozi, for example, or Andrew Tate, for example. You can look at all these different types of content styles that they've done, and you can just consume it. Or you can actually learn, how are they doing that? Why are they doing it in this way? Why are they presenting, you know, this particular YouTube video, or this particular reel, or this particular tweet, or whatever it may be? Why is it they're doing it in this specific way? You know, to learn deeper about how they're marketing, how they're relaying their information. And I think, especially coming into podcasting, for example, like I'm sure you had a certain perception on the outside, then coming into it, you probably very quickly realize, okay, actually, I need to be a bit more mindful on this side. I need to think about how I can deliver this, introduction, or this particular question. And it's interesting because I feel like a lot of people, again, it's the surface. You know, they will watch a podcast episode, watch Words of Wisdom. Okay. Oh, I got this guest on. Okay. Just listen. That's it. They won't go, as you said, like actually try and actively be looking between the lines of, oh, that was their routine, or that's how they actually got over that hurdle. Instead, they're just listening, like, oh, and they hear a buzzword like they made 100K, or they passed a challenge. But that's it. They're not actually saying, okay, what was the bit he said just before that led to him passing the challenge or making that money? And I think it is something that hopefully the more we highlight it, and I think the more people become a bit more aware.
O sea, aquí básicamente lo que está diciendo es que mucha gente se obsesiona con el no, voy a pasar el challenge, quiero pasar la cuenta de 10.000, o quiero hacer un 20 o un 40% de una cuenta de 10.000, por ejemplo, ¿no? Pero no se centran, por ejemplo, en qué puedo hacer para mejorar ese challenge, o qué puedo hacer para tener mejor gestión, o por ejemplo, qué puedo hacer para tener mejor gestión o mayor control de la impulsividad, o del estado emocional, o el cómo me afecta a mi umbral de depresión sobre un SL o una posición que está en movimiento, ¿no? No se centran en eso, simplemente se centran en pasar el challenge y ya está, ¿no? Cuando va muchísimo más allá.
And I think it does come down to what you said as well, in terms of them consuming the content to a point where they start to pick up on these things subconsciously, you know, and it starts to slowly shift their beliefs and their traits and their habits very, very slowly. And I think the more people, as in terms of paradigm shift, the more they can, you know, decide to make these changes, decide that they don't want to keep doing the same thing over and over, that's when it starts to formulate and change for them.
I think there's an art of actively viewing podcasts and content to make it not just you're eating your dinner and passively watching it, because then that just becomes entertainment. But if you actually want to learn, you should have an approach, which is have notes. I have friends who use Notion and actually really detailed notes. I don't do that, but I have my iPad and I'll take notes. But above that, I think you need to have a lens to filter things, because the content that appears on your feed and does well is the polarizing stuff, the controversial stuff, which is why certain people blow up. But you've got to look past that, because not the things that they're saying are controversial is not the key to their success. That's the key to getting it out to people. And then you got to find below that what are the common denominators between the guys you mentioned, a Tate, an Iman, and a Hormozi. They have different ways, different personalities, different content styles, but they will all have the same common denominator of their success. And that's the lens you need to put on. So between all of your guests too, the viewer should also be in mind, okay, don't look at the guy who went from minus or in debt into this amount of money, or the guy that went from rags to riches, whatever. That's going to help it get out in the algorithm. But then look what he was doing, that the other guys are doing. That common denominator will always be the same. And it comes down to those three that I said, skills, traits, and beliefs.
That's it. Well, I want to ask you guys a very specific question, moving into the sort of the trading side of things, which was like, you guys, knowing you guys now very well, over the last few months at least, I've always known of you in terms of having extremely high knowledge in trading and knowing extremely well how to market that knowledge as well. And then now knowing you even more, you have an extremely big network, right? You're extremely good at networking. You have extremely, high levels of knowledge in terms of marketing and everything. If you guys wanted to, in terms of capital as well, you could be the best marketers in the game, right? You could literally be the best marketers in the game, real traders with the best lifestyle marketing if you wanted to. Why haven't you done that? Let's take a break for a minute there, guys, because I want to tell you about our brand new sponsor, Funded Peaks. Now, Funded Peaks is a brand new evaluation firm which is set to release in the coming days. Now let me tell you, they are here to change the industry. I know what you're thinking, Riz, everyone says that, but let me tell you the facts. They are coming with the biggest max drawdown in the entire industry. It is 12%. So you have 12% max drawdown, so you can have peace of mind when you are trading. Not only that, that drawdown is actually balanced based drawdown. Again, so you can have peace of mind to trade any strategy that you have. On top of that, they're focused on giving you the best trading conditions so you can have peace of mind when you're trading. You can have a max allocation of $600,000 with Funded Peaks alone, and when you get payouts, they will be processed in as little as 24 hours. They are also bringing in the best educators in the trading industry so that they can provide value to their community. And that is only a couple of reasons as to why they are looking to change the industry. A huge announcement is coming into a complete game changer within the industry. The best way to find out is to make sure you click the link in the description below, join the Discord, join the email list, and you can actually have early access to Funded Peaks. I am extremely excited for their launch, and I cannot wait to see the game change. But for now, click those links, and let's get back to the episode.
This is something we've asked between ourselves a lot of time. We've had a lot of conversations regarding this topic because we saw how some people were blowing up after doing these sort of things that we could be doing very easily. I think Waqar, Wally, and myself, we don't post 95% of the things we do in social media. So when I still post something and then you'll get that comment of like, oh, you're flexing today or this or that. And I'm like, we don't post 90% of the things we do. We've had these thoughts. I just don't know. I don't feel it was appropriate to fall into that category. Again, after speaking, because now we started as a, I don't want to say as a hobby, but the company itself, it was a hobby. Like it was not a thing that we thought it was going to do all right and stuff. We just starting and let's see how this goes. We knew we were good traders, but we didn't know how to manage, how to run a company. So we had a conversation at the beginning and we said, do we want to fall into this category? We could actually do that. Out of the three of us, the one that had a bit more of a personality of show off at the moment was Wally. And
we had to tame him.
And we didn't see that going the direction we wanted. So we had a conversation because we knew that how I'm acting is going to represent now Waqar and Wally, and now how Wally acts is going to represent Waqar and myself and all the way, the three of us. So we didn't like it. We didn't like how it's going to sit in there. I believe that trading is a very difficult thing and it takes a lot of time.
A ver, aquí realmente de lo que está hablando es de cómo más o menos iniciaron W, ¿no? Ellos cuando iniciaron, ahora creo que unos 5 años más o menos, eran buenos, o sea, muy buenos traders, pero no sabían cómo gestionar una empresa, cómo llevar esa compañía, cómo gestionar todo ese sistema educativo que querían montar y expandir a los demás, ¿no? Y entonces, del grupo de tres, el que más centrado está es Wally, ¿no? Que no está aquí, no sale en el podcast, pero era el más centrado y fue el que los guió a cómo llevar una compañía y a cómo defenderse o cómo defenderse ellos mismos y cómo hablar en nombre de otra persona, por ejemplo, defendiendo la compañía o aportando sobre la compañía, ¿no? Entonces, básicamente eso. Después está hablando también que trading es una profesión muy dura, o sea, realmente muy dura, ¿no? Y ahora es cuando vamos a proseguir.
And it's very easy to market it the way people are doing it to try to sell something. Again, if we wanted to do it, it would be easy. Now I think we're reconsidering things on not in terms of like flashy lifestyle. Just show more like this is ourselves. I think we haven't exposed how we are or longer format, and I think we're gonna be doing it more often and get into social media. But yeah, let's see. I don't know.
You know the guru formula? It's so simple, actually. The
So
guru
simple.
formula, you start a course, you rent a car, now you look rich, you blow up that course, you get views, and then you buy a car. So you went from rental to buying a car. Now you can promote you bought the car, your sales go up, your courses go up, and it's a rinse and repeat of that.
Yeah.
But look, the real reason is, first of all, my parents would kill me if I even thought of doing something ridiculous like that. But beyond that, it's what you look up to. And I think a lot of people get into trading because they saw people before them posting a lifestyle. They got into the industry for that same lifestyle, and then they want to emulate the people they look up to, meaning they do the same things. And then it becomes an industry spiral of mentors birth more mentors, and they birth lifestyle mentors, and it becomes that vicious cycle. But I don't look up to that, and I never had. The people I look up to are one of the biggest guys I look up to is Alex Hormozi, and you gotta think, what are you trying to achieve? He's worth over 100 million. He wears the same vest every day. He wears the same ugly shorts every day and the same ripped hat every single day. He doesn't flash anything. He doesn't, because what does it benefit him? What does that achieve? And I think for longevity in any industry, you got to not look like a kid. You got to look like not a flashy kid. Because if I wanted to have a conversation with Hormozi and he came on my Instagram feed and he saw me running around with Lambos and this
or
and
on
that.
top of a McLaren, sitting on top of a McLaren.
Yeah, just like sitting on top of a car. You think he's actually going to take me seriously? Absolutely not. So it's longevity. It's fun in your 20s, but what about in your 40s? If you're known as that guy, you're not going to have a long career or a respected career. And I think my background, my family background, the education that I've had, it just didn't align with what I wanted to achieve. And I think Hormozi inspired me also of what is the purpose of social media? Why?
O sea que aquí realmente está hablando, aparte de lo que es trading, es que está muy bien a tus 20 el ser un poco cabra loca, ¿no? Y tomarte esto de forma graciosa. Pero ¿y qué pasa a tus 40? ¿No? ¿Qué pasa a tus 40 y, o sea, qué tipo de futuro profesionalmente vas a tener si no te tomas esto en serio, ¿no? Entonces, básicamente está hablando de lo que puede causar también el tema de las redes sociales, que te influyen muchas veces a buscar esa facilidad y creerte cosas las cuales no son realmente, ¿no? Y sobre todo el tema de dar ese salto a la madurez y el profesionalismo, aparte del trading, también con el desarrollo de tus hábitos, ¿no? Es lo más importante.
Are you using it and we using it? It's a tool. And what is the objective of using social media? If it's to garner jealousy and that kind of, or show and flash, you're using it for that reason, and that's a more egotistical / sales reason. You want the validation of others, or you want to blow up a business through selling a dream. That's not neither of those fit the category that I or we want to use it for. The tool is you can grow big businesses, where Hormozi was he reached 100 million without having a social presence at all. He didn't use anything, and then he was sitting around, he was like, Conor McGregor just sold his Proper 12, 600 million. The Rock, Dwayne Johnson, sold Terramana for billions. Kylie Jenner comes and the cosmetics that she does, 800 million. So he was sitting around thinking, these guys are not better at business than me, but they're getting huge cash exit. And then he realized, okay, social media is a tool and you don't need to flash to achieve that. You need to give value to the marketplace. And his principle has been the same for any business, which is you give value, you deposit goodwill, and that's from any marketing campaign, any business. You have to have a value exchange, whether that's a value of a fashion brand where the value you're getting is status. You wear a Louis Vuitton logo because that means something to the other people that know about the brand. Or you're drinking a certain drink because of the status it can come with. I'm drinking this branded drink. They all taste the same probably. And the same comes with what we're trying to achieve is you build a personal brand, you give enough value, you deposit enough goodwill in your audience. If you do that you'd make a YouTube video to give value and then you ask to sell something the same day, no one believes you did that for value. It was disingenuous. But then let's say you give value for 1 year and then you ask for something. If you helped enough people in that 1 year of giving value, they will feel so grateful to you and almost feel like they owe you something. And when you sell whatever you want to sell, that could be anything, they'll come and want to be part of whatever you've built. And then Hormozi's principle is simple. You give for 10 years, you'll be a billionaire. You just keep giving. And it used to be give, and then ask. His principle is now give. When it comes time to ask, give, and wait for them to ask. And that's how you build a business. Because when people ask for something and you give it to them, you're not selling anymore. You're fulfilling a need. And I think that's the key for any business or anything you try and achieve is build a brand, build a community, build an audience, and then see what happens. And that's what we did with the podcast too, is we don't know where it's going to go, but we'll do it.
O sea, aquí de lo que está hablando, y realmente es así, pues porque yo justamente lo estoy haciendo, ¿no? En crear mi audiencia, en crear un buen contenido, en crear una buena comunidad, ¿no? Y el dar, y siempre estar dando sin esperar nada a cambio. Entonces es de lo que está hablando Waqar, ¿no? El que realmente para emprender un negocio, pues tienes que dar, y luego si acaso vas a recibir o no vas a recibir, ¿entiendes? No ir con la mentalidad de estar preguntando o estar pidiendo o estar poniendo la mano, ¿vale? Entonces eso es un negocio, realmente crea tu audiencia, por ejemplo, en redes sociales, crea tú una buena audiencia, crea una buena comunidad, crea un buen contenido y después mira a ver lo que pasa, ¿no?
And see what happens.
And I think usually an absence of value is filled with all these marketing things. So I don't know, I feel in my opinion it's a bit cringe to do all of that. But at the same time, I think it doesn't represent us. So I think we have much more to offer. So that's why I think, for example, the podcast one is a very good journey for us. I think, for example, I'm going to start blogging or doing other sort of things, more of my day-to-day on my Spanish, for example, YouTube channel. So all these things, I think, represent us better than just have a picture out there or have a picture of us on a car or all these flashy things. I think usually, as I said, it's usually an absence of value. You feel it with all these marketing techniques.
Definitely, yeah. Like there's a known blueprint. We all know it now, especially being in the industry for so long. I think majority of people kind of know it. Obviously, there's new people coming in all the time. There's the people who are quite still beginners, so they won't see through that, and they'll have to maybe go through trial and error, or just once they gain enough experience, they'll see. But like I said, like you guys could easily go for that blueprint if you wanted to, And I think people out there don't maybe know that, But have you guys ever thought about doing something different in terms of even just coaching people to be similar like yourselves in terms of knowing how to speak, articulate themselves, knowing how to network, because like we talked about at the very beginning, a lot of people don't have these skills outside of trading, can help with their trading, but outside of trading, you ever thought about doing something, say,
maybe
more
not
outside the trading space as well?
Yeah, maybe not coaching or anything like that, but I think that need, that is stuff we enjoy talking about. And I like speaking about these soft skills, for example. That's what we showcase in the podcast, actually. It's like when we come on and we speak about these kind of topics, it's our platform at that point. We can talk about whatever, and that's where we'll go deep into business, or we'll go deep into how to network correctly and all of these things. So they're all skill sets. And if, especially in Dubai, you fly to Dubai and man, I see so many cringe things that people do. It's from a lack of knowledge, where I meet a guy and we're at a dinner table and I'll be like, hey man, what do you do? So he pulls out his Instagram and shows me, this is my profile, to show me how many followers he has. He could have just also told me what he does, but his image was tied to his So you notice that. So it's all about how you carry yourself, how you behave. And there's a correct way to do it. Just like there's dinner etiquettes, there's etiquettes when you're in school between your head teacher, there's etiquettes in an office space. There's also etiquettes when you meet people, which not everyone realizes depending on how you've been raised, what kind of background you have. But I think networking shouldn't be always treated like you're chilling with your friends, especially when it's a new person. You don't know what kind of standards they have, what kind of things they resonate with. But you should treat it like a friendship of, you don't want to get anything from them. You just come and hang out with them. That's what networking is. But you got to do it in a certain way. And I think the more you realize that, the more things just happen. And yeah, we've been lucky to build a network as we have out here.
Definitely. I think people don't know. If people knew the names in your black book, if you will, they'd be shocked, right? Yeah. And it doesn't shock me in a sense. Like, it's still like when you tell me certain names, I'm like, whoa, like, that's incredible. But it doesn't shock me because even before I knew you guys more personally, you can see the caliber of people you are, right? It shines through the way that you speak, the way that you present the information as well. You don't go for cutting corners. You're not doing it for the sake of doing it, while a lot of people do that. They just they will put a post or make a video for the sake of doing that and kind of fit into a box, a mold, while you guys have always, from when you even started, were separate to that. Very, very different, definitely much higher caliber. So it doesn't surprise me when I see the sort of caliber of people that you network with and continuously network with as well. And I'm excited to see a lot more of these guests that come up. I think people are going to be shocked as time goes on, the sort of guests that you'll have on.
You add in a bit of followers on top of that. And I have on the YouTube banner of our podcast, it's like goal guests.
I see, yeah.
And those are the people we really want to get one day. So it's first of all who you know, but then eventually becomes is that everyone's like 3 people away from you. There's a name for that, where it's like a friend of a friend of a friend is anyone. You could reach the president or whoever just through having that right connect. So you add a bit of followers on top, and then people find you and want to be on a platform. So yeah, that's the plan at least.
It's incredible. It's going to be interesting. I think you'll tick them all off.
Hopefully so.
But let's go into trading. What I want to ask you, it's a bit of maybe a personal question, but I thought, it might be, because I've not asked you and I don't think I've heard it anywhere else, but like, what is your current setup for your personal trading? Are you doing personal accounts? Are you doing prop firms? Are you doing investor capital? What's the situation for you guys? Let's take a break for a minute there, guys, because I want to tell you about the best trading tool on the market, TradeZeller. The reason why TradeZeller is the #1 trading tool that every trader needs is because you can do backtesting, automated journaling, trade replay, in-depth analytics, and so much more. And the greatest part about TradeZeller is that it's all automated. All you have to do is connect your MT4 and MT5. It will pull all your data onto the dashboard. You can add playbooks. You can just add notes. You can add images from your trades, and you can get the insights that is necessary for you to progress as a trader. Now, TradeZeller is for absolutely everyone. Whether you're a crypto trader, whether you're a Forex trader, whether you trade prop firms, it is for absolutely everyone. And that is why thousands of traders have signed up using my link here through the podcast. Make sure you use the code RIZ10 for 10% off your monthly subscription, or WOR for 20% off your yearly subscription. The link is in the description below. And let's get back to the episode.
So my setup is very specific, and I like to have it in the way I have, because when you start trading, you have a roadmap put out in front of you. Especially now, it's a very simple roadmap, which is acquire a skill, get good at trading, start off on a demo and practice the skill, and then go for a prop firm and leverage the prop firms to take profit, and then build your own account. I think that's a good route, actually. But when we started, that didn't exist. Prop firms weren't a thing. So my current setup right now was, back in the day, I was all over the place, where I was maybe a swing trader, but at the same time, I was trying to do scalping and intercession. So that was weird. And then I was trying to look at every single pair. At the same time, I'd also trade platinum, silver, and commodities, and oil and gold. So then when your eyes are all over the place and you don't know what you are, you got a machine gun, you're trying to spray everything, but you're not going to hit much. You might randomly hit something, but it's not a proper approach. So then as time went on, we focused on very limited pairs. So I only trade for the last 2 years Euro USD and GBP USD. And that's all I'll trade. There's opportunities on every other pair I know, but you just...
Aquí de lo que está hablando Waqar, que de la mejor forma que, o sea, que en estos 2 últimos años, de la forma que él lo ha hecho profesionalmente es operar 2 pares. euro-dólar y GBP-dólar, ¿no? Y que se ha centrado simplemente en esos dos pares y las oportunidades que dan esos dos pares, ¿no?
Just got to be okay with not capitalizing on that.
Yeah.
And that's hard because you see on social media, especially because I follow a lot of traders, I'll see, oh, this guy caught a banger on gold, this guy Alex caught a banger on Euro GBP, which I don't trade.
Y lo que les ha preguntado Rhizom es de qué forma están gestionando ellos capital, si es capital propio, si es capital de fondeo, y aquí es cuando están explicando, todavía no lo han explicado, están explicando más o menos en lo que se centran, pero ahora lo explicarán.
You got to be at peace with that, and that's fine. And now it's got to the point where I did mentorships, I learned a lot online on YouTube. But that brings you to a certain level. And I think people scapegoat their issues of non-profitability onto what? They throw it onto, I don't have enough knowledge. But that's not always the roadblock or the bottleneck. The bottleneck can be a few things, but everybody always says, I need a better mentor, I need better education. But it reaches a point where you plateau and you get diminishing returns on your education, where you do 2 or 3 courses, you've learnt enough, I think. You do 2-3 credible courses, there's no holy grail to find and there's no more information you need. Now what you lack is market IQ and market experience. So I think to gain that, there's only one way, and that's doing it yourself. No mentor can teach you that, no course can teach you that, no YouTube video can teach you that. It's real life tangible experience. And the only way to gain that is what I've done for the last 2 years is I watch Euro USD and GBP USD every single day without fail, London session, New York session. I haven't missed a candle M1 on London Open or New York Open in about 2 years. And I've learned so.
O sea, de lo que ha hablado aquí realmente es de lo que se ha enfocado y en las sesiones que se ha enfocado, ¿no? Pero sobre todo, espera, vamos a darle un momentín para atrás.
London session, New York session. I haven't missed a candle on M1 to find, and there's no more information you need. Now what you lack is market IQ and market experience.
Listo, sí, no, lo que ha dicho aquí es que ni vídeos de YouTube ni todo el dinero que des por ahí te van a enseñar realmente cómo funciona el mercado o cómo puedes aprovechar las oportunidades o cómo tener mayor confianza o cómo tener mayor gestión o cómo tener mayor control sobre el precio, cómo tener mayor entendimiento sobre la narrativa, ¿no? del gráfico, y eso solamente te lo va a dar la experiencia, el nivel que tú tienes de experiencia, y esos son los años, y eso te va a hacer un trader profesional y un trader destacable, ¿no?
So I think to gain that, there's only one way, and that's doing it yourself. No mentor can teach you that, no course can teach you that, no YouTube video can teach you that. It's real life tangible experience. And the only way to gain that is what I've done for the last 2 years is I watch Euro USD and GBP USD every single day without fail, London session, New York session. I haven't missed a candle on M1 on London Open or New York Open in about 2 years. And I've learned so much more in that process than anything else I can imagine. And that's what I tell every trader. You want to get good at trading? Just do a couple of good courses. That's your foundation. Leave that community, leave whatever. And now just you and the market, and just follow one pair for 1 year. That's going to teach you more than anything you need. So I really refined it down to these 2 pairs. And I changed my approach from I don't want to be swing scalped, whatever. I trade intra-session. So I'll have 2 pairs, 2 opportunity windows. So I have my London Open and New York window, and I have GU and EU. So per day I can have up to 4 opportunities. And then that becomes the problem of any trader, which is there's an abundance of opportunities. When you have done courses and you have confluences that you can now trade, I could list like 100 confluences. There's from head and shoulders to patterns to then also smart money concepts to market structure to blah, 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 blah. When you are armed with all of this information, you think you are empowered because you have so many confluences, when in fact it's probably going to be problematic, because more confluences equals more problems, because you got more money, more problems. You got more opportunities to take, and therefore you got the scope to take more losses. So then it becomes, you know your confluences, that's fine, that's information, that's education, but application is something else. To apply correctly, you got to take your confluences, prioritize them to say, these ones are useful to me, these ones show profitability, these ones are not for me. Once you found your set of confluences, let's say you got 10 now, you have to put them in a hierarchy. So if I...
O sea, de lo que está hablando aquí es que mayores confluencias, es decir, si tú te montas mayores probabilidades es igual a mayor problema, ya que tienes diferentes confluencias en diferente escenario que tienes, ¿no? Entonces lo que tienes que hacer es quitarte todo el ruido y centrarte en lo que realmente te funciona, qué es lo que realmente te funciona a ti, qué es lo que no te funciona a ti, ¿no? Y saber diferenciar eso.
Have a liquidity run, but I'm missing a pro trend, that's okay. I will prioritize liquidity over trend. But let's say I have Asia range, and I only have Asia range as a confirmation. It's not enough. So I need to know what are the ones that I will prioritize and my non-negotiable confluences and my preferential confluences. When I reached that point, or we reached that point, it still felt a bit random because you go into the market every day and you're still trying to figure it out. And you're trying to like, okay, today it looks like this. Let me throw these confluences. These ones are the good ones. These are the okay ones. And then you're winging it still. That's not professional and that's not a system once again. So then you have to take it to the next step, which is you got to eventually reach trade models. And that's the only way to do it. You got to have exact setups with exact predefined rules and exact ways that it's supposed to look, exact specific criterias that is objective and mechanical and repeatable. Because I'm sure you've noticed where over the space of a year, you'll have a certain type of trade that you saw it 6 months ago and you saw it today. And that is a repeatable trade. And everybody can find that. That's not hard. It's just you've got to be patient to put away the opportunities that look like that. It's not exactly that model, but it's missing one thing, or it's got another thing in time, or you're missing the timing, you're missing the lower time frame confirmation. That is the devil in your ear telling you take that trade anyway. Yeah. That is the difference between, I think, a good trader and a great trader. It's that impulse control to say no. And I think a roadmap for a trader, actually, it's a very simple roadmap, which is have a profitable strategy, which I can talk about. And then it's also follow your profitable strategy. And that is the one that area people flop at. Yeah. You think you get a profitable strategy and people can backtest and be profitable. People can do these simulators and find success. And then they come to the live market and they don't do it. What is that discrepancy? Why don't they follow their plan? It's psychology. So when you get into that and you see, okay, why can't I follow my plan? And then you think, okay, it could be all these kind of reasons. It's my mentor, it's my community, I was distracted, it's my marriage, it's whatever. The reality is none of them. It's only two things. It's fear and stress. And those kind of things is fear of an undesired outcome. You fear the loss, or you have that greed, which is still fear orientated because you want to make a dollar amount. So once you recognize that I have fear and these emotions.
O sea, de lo que ha hablado realmente, aparte de lo que está hablando ahora, de que, bueno, que en el mercado realmente vas a tener miedo, miedo a los SLs, te van a afectar ciertas emociones por dónde está el precio, por dudas que tengas a lo mejor de diferentes zonas, y ese miedo que vas a tener, ¿no? Pero aparte, él te está hablando de centrarte como trader, tomarte profesionalmente, no el saber que tienes una estrategia ganadora por unos cuantos trades o por X tiempo, ¿no? Sino lo que te tienes que centrar realmente es en seguir esa estrategia ganadora, ¿no? Y el detectar qué es lo que la hace ganadora. Entonces esa es la diferencia, ¿no? Y aparte de estar hablando ahora mismo de lo que es realmente el trading, ¿no? Que el que supone es miedo, es estrés, es ansiedad, ¿no? Son muchísimas emociones juntas que lo engloban todo, ¿no? Y tú tienes que saber y tener esa madurez como para poder afrontarte y decir, no, pues voy a tener ese control de emociones, voy a tener ese control de impulsividad, voy a tener mayor gestión, voy a saber diferenciar qué es lo que quiero operar y lo que no, y saber decir no como trader, ¿no? Ahí está el punto profesional, y el saber controlar pues todo ese conjunto de emociones que hemos dicho, ¿no?
That's stopping me from performing between what I've learned, what my strategy is, and what my execution is. You've identified it now, and a lot of people reach that stage too. And now you're a good trader. But how do you get to the great trader? Then you have to address that, and you think, okay, how do I control my emotions? So then everybody goes into the same thing: cold showers, meditation, journaling, and blah, blah. Again, I think that puts you in a better category if you're a good trader, because now you're starting to control your emotions. You're having impulse control. But there's a level above that. And I think to be a great trader, you're not supposed to control and suppress your emotions, because we're human and emotions are a signal to us. So just like I touch something hot by accident and I burn my hand, you have a stimulus and it gives you pain. That feeling of pain is telling you to do something. It's a warning sign, and therefore I should remove my hand. So apply that same thing to every emotion. If I'm feeling fear, now I'm not supposed to react on that and jump into a trade or overtrade or whatever people do with their fear. Use it and recognize your emotion. And that is trying to warn you of something. And then once you start to not control your emotion, but recognize your emotion, that's when you become a great trader, because now you realize I'm feeling an emotion, it's telling me to do something. I'm not.
O sea, aquí de lo que habla él, que es muy importante, es muy bueno, es el cuando tengas un tipo de emoción, por ejemplo, has tocado un SL, ¿no? Pues por ejemplo, no centrarte en querer controlar esa emoción, ¿no? Eso está muy bien como trader y vas a ser bueno, ¿no? Pero para el siguiente nivel, el nivel profesional del que habla Waqar, es no centrarte en querer controlar esa emoción, simplemente el saber reconocer que estás teniendo esa sensación o esa emoción en ocurrir algo en cierto punto del mercado, y el saber decirte, vale, la cabeza me está diciendo que haga esto, pero voy a intentar o voy a tratar de no operar, por ejemplo, ¿no? O de no tener esta gestión, o voy a intentar no entrar en estas zonas, ¿no?
I'm going to understand why I'm getting that emotion, what I'm trying to do. And then you realize, okay, I'm trying to jump into a trade because of I have anchors in my trading, maybe childhood traumas, maybe you have something to prove, maybe you're trying to just get out of a tough spot, but you're always coming from an emotional perspective to make you have a negative reaction. Instead of trying to control your emotion, I think recognize it and deal with it, develop proper coping mechanisms. That's when you start to get into that great category again. And I think that comes down to every portion, which is your technical. You need to have a plan to be knowing what is a great one, and you need to, for your psychology, the same thing. You need to know what makes a great trader. If you wanted to add anything else.
Yeah, before I jump into how I manage my account, just to add something to what he was saying, something I feel is also very important as a trader is understanding what is, which I know he mentioned, but what is exactly the recurrency, or like how many trades do you have a month, for example. The reason this is very important is because, for example, I had an example, I was speaking with some traders last week, where Monday there's a great setup, right? Where everyone can identify, but not everyone catches it. So usually what happens is that Tuesday and Wednesday, the person that hasn't catch that trade on Monday is actually chasing that fear of like, oh, I missed on that opportunity, no? The fear of missing out. So very important is that when you understand your data based on your journal, personal journal, not your mentors, not your friends, like your journal, when you properly understand that, that also relieves a bit of knowing that the next setup is going to be soon, depending on how you trade, right? So knowing that, let's say you have 5 trades a month, okay, you know that you missed the Monday one, there's a high likelihood that you might not have another.
Aquí de lo que está hablando realmente es el saber las probabilidades de tu estrategia. Es decir, cuando tú ya tienes un journaling, un registro de todo tu estrategia, ¿no? De todo tu plan, tú vas a saber que ciertas probabilidades tienes, ¿no? Es decir, si de cada 5 entradas que meto a la semana en el mercado, de esas 5 se me dan 3 y 2 son perdedoras, vale, pues si sé que he tocado un SL o que he dejado escapar una oportunidad que sabía que quería atrapar pero no la pude cachear en el momento o ejecutar en el momento y se me escapó, pues no vayas con ese miedo, ¿no? Porque tú ya sabes tus probabilidades, sabes que cada 5 trades que colocas, 3 se te dan, 2 son perdedores, entonces tú ya sabes tus probabilidades, ¿no?
The trade during that week. Okay, on average, of course, it's all an average thing, but that way, when you have your data proven for a long period of time, again, not 1 month, not 2 months, something like that, it's also going to give you a bit more of peace when trading, because you know, okay, this week is on my trading plan, is on based on my strikes, something that we can also tap in a second when it comes into account management, the way that we actually run all of these things. And I think that will also give a bit more of peace of mind to traders when it comes into knowing how they are as a trader, but also what's their recurrent situation of their setups. And now jumping into how I manage my accounts, well, Waqar and myself, we both come more from a swing perspective and slowly have been evolving, and also now intraday trading. So now I actually separate them both, because we have something that is called the prime setup. So the prime setup is something that aligns more with higher time frame analysis. So for example, we use the daily time frame, the weekly time frame, but that's more for direction, because as you know, like you cannot pick just a POI based on the monthly or the weekly or something like that. It will be like a huge area where you cannot actually execute with precision on a lower time frame. So we use those higher time frames more for direction. Now, when a higher time frame is aligned with the rest of the confluences, I call that a prime setup. Now, if we think about logically, the prime setup, which needs higher time frame to be aligned, is going to take more time for daily to retrace, for daily to, I don't know, to make a lower low, all these situations, right? So this is a setup that more or less I can have 3 times a quarter.
Okay, yeah.
Okay, or 5 times a quarter, depending, okay?
Yeah.
It depends more or less on how the price action is moving, how quickly is the market and the volatility, but this is a setup we can have at that range of time. So knowing that sort of setup, we can actually increase our risk, because we know that if I'm just gonna have like, I don't know, 6 setups in a quarter, I can actually put 1%, I can actually put 2%, depending on the risk appetite of each trader. Myself, I do 1%. So on those trades, I'm happy to do that because I know something that is very important. I know my low, and my low is going to be what's going to be the worst case scenario. If I miss 6 trades, that means the quarter will be minus 6%, which I'm still happy because overall the whole year is still not a bad drawdown. So now will be the higher time frame setup or the swing trading one. Then you go into the intraday.
Oh, by the way, that would be a separate account.
Separate account.
Aquí de lo que hablan es de cómo gestionan sus cuentas, ¿no? Ellos tienen 2 cuentas. Ellos vienen, por ejemplo, de operar o de ser traders a largo plazo, swing traders, ¿no? Y se han metido en el proceso, ¿no? Y se han convertido en más también day traders, ¿no? En traders intradiarios, ¿no? Pero que operan trade swings y operan también trades intradiarios, pero en cuentas separadas, ¿no? En temas de trade swing se centran en temporalidades semanales, diarios, para tener la dirección del precio, ¿no? Pero intradiariamente se centran en lo que es en el ciclo de la sesión, en la estructura interna y demás, ¿no? Entonces es un poco lo que están comentando, ¿no? Pero que operan swing intradiario, pero de forma separada en diferente cuenta, ¿no?
You get one account for swing trading.
For the prime setup.
Yes, because I like to separate accounts also based on risk management. So one is the one that I'm going 1%. And then the other account is more an intraday trading, which I'm not using that much of a scenario as Waqar was saying. For example, we're going to be noticing more these liquidity runs maybe on M15, right? So this is going to be overall all the movement that happens on a big retracement, but you can still buy and sell and try to capitalize on all that movement. So that's going to be more something that happens between 3 to 6 times a week, for example. So that's my average. So now knowing that, I trade 0.5% because I know that if everything goes wrong that week, more or less on average, I'm going to be 3% of my account down. And because this is a more riskier account in terms of intraday trading, when I balance it out over the whole month, it's more or less.
Aquí de lo que está hablando, que es, por ejemplo, en la cuenta Swing Trader de los Prime Setups, arriesga un 1%, ¿no? Pero en la cuenta intradiaria, él arriesga un 0.50% por trade, por ejemplo, como yo también hago, ¿no? Y eso lo hace porque si va todo mal en la semana y él sabe que tiene una media de 5 o 6 trades semanales, si va todo mal y falla esos 5 o 6 trades y van a SL, como mucho va a perder un 3%, ¿no? Y es de lo que habla, ¿no? De la gestión que está teniendo diferentes cuentas, que en unas es un poco más agresivo y en otras es un poco más conservador, ¿no? Pero simplemente por los trades que él sabe que tiene semanalmente, intradiariamente o en forma swing, ¿no?
Around 10 to 12 to 9% maximum drawdown if everything goes wrong. Like if I take loss after loss after loss after loss after loss, which again, we all understand probabilities, and even my sister who doesn't trade, if you take 20 trades in a row and even don't know how to trade, one will go in your favor. If at least you have a bit of an edge, right? So if everything goes wrong, I know I'll be down more or less 9%, 10% of my account. So that's how I always try to be preserving my capital. And then from there, there's more like a scaling plan. So for example, okay, I'm going to go on a bit of a tangent all of this, but for example, also how to scale when you're in profit, right? Because the drawdown is fine. Now I cover 3% more or less a week. Now, what happens when you have that 1 to 10 on a Monday or a Tuesday, which you are up on your account? How you can actually now try to take those weeks for actually big movements of your account in terms of percentages. So what I do is I have something that we call the strike system. So the strike system will be, as I said, you're going to have 6 to 3 more or less strikes a week. So when I have Monday, for example, I have a trade, let's say a 1 to 10, a 0.5%, that's 5%, right? Tuesday, I might not have a trade, okay? Then I have Wednesday and I have another trade. Let's say I lose it, minus 0.5%, 4.5% now. So now I'm 4.5% and I have Thursday and I have Friday to trade, okay? So now having Thursday and Friday to trade, there's gonna be 4 sessions. Personally, I'm not a big fan of New York on Friday. Okay, so out of those 4 sessions, I have 3 sessions, and my account is 4.5% up for the week. So now I do something that is more a fixed percentage for me. So knowing that I have 4.5% up, and I have, let's say, 3 sessions left, instead of doing 0.5%, I'm gonna go 1%. Okay, knowing that my account still will be, let's say, up 1.5, 2.2%, and that will be if you get a trade in every single session. So let's say you jump now into Thursday and you get a trade in London, I'll go 1%. And the reason is because I'm happy to lose between 4.5 to 3.5, but I'm happy to gain that 1% trade that can actually take me to a real 1 to 10. Real because I'm risking 1%, so that will be like a 10% or a 8%. And that's how actually we can scale bigger our accounts, but at the same time, always with profit, but at the same time, always knowing where's your limit of drawdown. So that's what I wanted to add more of what Waqar said. I think he did a very good explanation on all the psychology side and stuff. So this is more or less in terms of accounts, how I run a swing trading account for a 1% and the strike system for the intraday account. And very importantly, I know my setups. I know how recurrent they are. Therefore, I don't have that FOMO of knowing, oh, I missed Tuesday's trade. Okay, it's fine. I know for a fact that between Wednesday, Thursday, and Friday, I'm getting a minimum of 1 to 2 trades based on my way of trading.
Definitely. No, definitely. I think it's very interesting what you said there. And is it...
O sea, de lo que ha hablado aquí Alex, más o menos así, porque lo he entendido todo, pero cierta parte, así se me olvida por el camino, ¿no? Es que él sobre todo se centra en las sesiones del martes, miércoles y jueves, porque son sesiones donde él puede, mínimo mete de 1 a 2 trades, ¿no? Si no son 3. Y que personalmente, por ejemplo, no se centra los viernes en New York, por ejemplo, ¿no? Sí en Londres, pero no en New York, ¿no? Entonces es un poco de lo que ha estado hablando y las sesiones, ¿no?
This all run on like personal accounts?
Yeah.
So personal capital? Incredible. So
I think another thing to add though is the prop firm space adds a level of unrealistic expectations, where it's normalized because of the challenge target of 8 or 10%. Now that's the range. That is deemed quite, it's deemed as a minimum actually, and then they add on the leaderboards. So now you're seeing the top performers, but those top performers are not necessarily the real traders, because there's people that are trying to flip accounts. They're using the prop firms like a casino. So they can build these big numbers, but I think it's even a prop statistic that the people that are on the leaderboard, they don't last more than 3 months. So the people that got a payout, they never make it to the 4th payout. Like that's 90% of the prop firm traders. But then you got to realize, okay, well, the prop firms, which we went into in another episode with you, of like how they'll put things in against you, and they play on your status. They, people get in for a lifestyle and stuff. They play on
that reel went viral. I'd posted like a week or two.
Got a few bangers,
and then MFF went down a week or two after I posted it, and then it started to go on the algo.
The things you said is completely true. Like the prop firm space is not there to help the trader, it's to profit off the trader. So then you got to realize there's going to be most people that will be losing from the prop firms. Just make sure you're not one of them. So what do you do that those people are not doing or are doing? You got to be different, and to be really in that percentile of people that are profitable. The expectation that I think is important to set is, in this day and age, I think most people can realize a high risk reward setup is quite possible. Everybody in this day and age can probably catch a 1 to 5 or 1 to 10. It's very, very achievable, just with a bit of basic knowledge. The problem becomes is people will get that 1 to 10 trade. and then lose 9 in a row after that.
Yes.
Just chasing randomness, not having strategy, not having trading models in place. So that makes them a break-even or non-profitable trader. But the expectation to have is, I've shown my performance, my metrics, my trades. I've shown this plenty of times. And I'm not even like, I used to be shy because everyone was like, an 80% win rate, a 90% win rate. This is what people would boast. And therefore I'd shy away from that because my win rate wasn't that. And then I was like, well, what do I care? Like, I have my performance. I've done it for long enough. We've been trading for 6 years now. My win rate is between 45 and 55%, depending on the month. That's verified and showed. So that's not the best win rate, but I still pull out profit from the market. But I'm not pulling out 200% a month or 100% per month. I'm pulling consistent gains, but it's around the 5 to 10% in a month on a good month at a 50% win rate on average. But I'm also trading quite aggressively. I'll be more, as Alex explained, the intra-session modeling. I'll be taking up to 10 trades in a week, quite high. But it's completely okay because when you're a little bit more experienced, you start to understand impulse control. You start to have that real detachment from the outcome of people make wrong decisions because they are attached to the outcome of you're sworn to your bias of I wanted to win, and you're not reacting to price. You're predicting price of I wanted that high to be made. Price was bullish, therefore that's what I'm going to trade, and that's the only lens they have. But if the key to a profitable trader is a flexible mind, to always be reacting to what the reality is rather than sworn to a bias of what you wanted. And when you're okay with, when you really embody that, you realize that a 50% win rate is absolutely fine. You got to be okay with taking losses and realizing there's two types of losses. A loss that is a valid loss. It was in your strategy. It was supposed to happen. It's factored in. That's the key. It's factored in. Your edge has told you that if you have a 50% win rate, if you take 3 losses in a row, if it's valid losses that you were executing on your exact model, on your exact plan, with every confluence that was supposed to be there, and you took a trade and it was a loss, pat yourself on the back. You did a good job. That was a valid loss. People would then take that loss and react to it. Oh man, I'm taking 3 losses in a row now. I'm on a losing streak. Let me change up. Let me change my strategy. Why? That was factored in. This was part of the plan. Those losses were meant to be there because you have, let's say, a 50% win rate. Over 10 trades, you might get all of your 5 losses that were factored in a row. Sometimes it might be at the end, sometimes mixed in. You don't know when your losses are going to come. It's a random distribution. That's a valid loss. There's also a thing called the invalid loss. Now, the invalid loss is when you take a trade that you were not supposed to take. And the problem with that one is invalid trades lead to wins as well. So now somebody will take an NFP trade and jump in and it just goes their way. They take a random trade and it looks good. They jump in because of FOMO and it played. That will birth such bad habits in you, and it will give you the wrong mindset because it's going to train your mind to say, deviating away from my plan sometimes leads to profit. So let me do that again because that's you chase that feeling. And now the more you deviate away from your plan, you're going to start introducing invalid trades, therefore wins that you shouldn't have taken. If you take an invalid trade, not part of your plan, and you win that trade, don't celebrate. You should be angry at yourself. Like, I should not have done that despite the outcome. When you start to then recognize you punish your invalid wins, then how are you going to look at your invalid losses? You're also going to punish that and say, okay, I should not have done that. And I know why, because I lost. Then you stick to your plan, and the less you deviate away from it, the more you'll come back to your norm, which is your data, which is your win rate is X and your risk reward on average is that. The key that I found, or we found in real profitability, was first of all having your confluence hierarchy, having a trading model, and having a set trading plan, objective, and so forth. That is a whole topic in itself. But beyond that, people can have the same trades and take different profits. You might have a trading view. The risk was 5 pips. The reward was 20 pips. You have a risk to reward. That is the risk reward of a setup. But the ROI, the return on investment, is different between all 3 of us. I might take a partial at 5 pips. You might take a partial after the whole trade and secure full volume. So that same risk reward trade, you and I might have a different ROI. So when you start to recognize that, that is a variable to also control and make it fixed. Just like you have your execution criteria as models, you should have models for your partialing system or taking profit. Because if everybody can get a 1 to 10, which I'm sure most of the viewers can, if everybody can catch a 1 to 10, who's the one that's winning? Is it the guy that's taking the full 10%? I would argue not. Is it the guy that's taking profit after 2 pips? Probably not.
O sea que aquí lo que ha dicho más o menos es, por ejemplo, si eres ese tipo de... O sea, que sí, que muchos se centran en coger, o muchos pueden tener ese trade 1 o 10, ¿no? Ratio y riesgo-beneficio 1 o 10. pero ¿cuántas personas de esos, por ejemplo, 7 trades que meten para conseguir ese 1-10 se le dan, cuántos de esos 7 trades o 10 trades se les están dando, ¿no? Si eres una persona que se están dando 8 trades de 10, muy bien. O si eres una persona que se le está dando 1 o 2 trades de 10, ¿no? Entonces, el saber, o sea, realmente, disculpad, el saber cuáles son las probabilidades de que se den o de que se no, ¿no? Y estudiar lo que es tu estrategia en profundidad.
So there's a way to manage your position accordingly too, and that is how you will compensate for your win rate. I don't think a 50% win rate is bad, but it's not the best. But you can really be really profitable over a long time with a 50% win rate, and it comes down to the models you have and your average risk reward of the setup, and then how you manage the ROI. So that's what we developed also is profit taking systems. So the key to that is you got to look at people look at the trades as a trade by trade basis, and they want to really maximize each trade. So what do they do? When you're in drawdown, you are not exiting the trade. You might be approaching your stop loss. What do people do? They move their stop loss, or they just imagine confidence. Oh, it looks like it's going to retrace. They hope.
They add to it.
Oh, they add to it, and let me double down on this. So when you're in drawdown, what are people? They are hopeful. When people are in profit, what are they? They're fearful. Like, let me close. What if it reverses? Whatever.
Yeah.
There's emotionality there. What you really need to understand is don't look at your trading as a trade by trade basis. You are supposed to have inefficiency in your trade by trade basis, because to maximize an individual trade, you want to get that 1 to 10, you take 10%. That is an efficient trade on one trade, but that is inefficient over time. Now, what I mean by that is, how many times have you had a 1 to 10 risk reward target and at 1 to 3 it retraced and you broke even? You didn't take a loss, but you broke even. Your opportunity cost was that 3% or 3R that you didn't capitalize on. Now you do that over 100 trades, you've actually got a huge inefficiency in your portfolio, but you were trying to recompensate that with your 1 to 10 full volume. Let me get that 10%.
Yeah.
But you're foregoing all of these mini trades.
Yeah.
So that's when a trader has to realize the profitable trader is not always the right trader. You don't have to be correct to make profit. You can have mechanisms in place to have an edge that give you a probabilistic way of thinking. I have to be right sometimes, but you can also make profit and be a losing trader. And I've shown that a lot. We've shown it in our stories as well. It's like this week I got none of my trades correct. I didn't get the directional bias correct on all of them because we're trading intra-session. We're trading the London volatility. We're going from Asia high to Asia low. It's a 20 pip range, 3-4 pip stop loss, which is very doable with lower time frame confirmation. Just that small impulse of 20 pips just to catch the Asia low liquidity. I had my targets to make a new lower low with pro trend, and that was supposed to be 50 pips, 100 pips.
Yeah.
It just took Asia low and then it reversed on me.
Yeah.
I was wrong, but I still was taking a partial.
Yeah.
So there's been weeks where I didn't get a full TP on any single one of my positions. So my week was wrong. And if you're trading that, maximizing each trade, you would have taken 0% profit. But if you understand your goal is not to optimize a trade, it's to optimize your portfolio over 1,000 trades. How do you optimize for 1,000 trades? Whereas you play the probabilities. Some trades, you're going to make no profit. Some trades, you're going to break even. Some trades, you're going to lose. Some trades are going to go halfway and reverse on you. Some trades are going to go all the way. Not all of them are going to go all the way. No one's 100% correct. So when you realize there's a spectrum of small wins, big wins, losses, there's a bell curve now where you have your outliers of full targets. They'll have your outliers of 2 pips in profit and then stop loss. And then the majority are kind of in the middle. How do you tackle that? You play the data. You play the statistics, which is have a partialing system in place that is predefined, just like your entries are predefined, to maximize on the overall portfolio. Now, what that looks like is, let's say the way I do it, or we do it, is I will only take a trade if I know the potential is a 1 to 10, the minimum. So that's my filtering criteria. If a trade is only going to give me a 1 to 5 on a hopeful perspective of if everything goes right, it only gives me a 1 to 5, I'll leave that opportunity. So that's a filter I have. So if I know my minimum is a 1 to 10, I don't need to necessarily go for those 1 to 50s or 1 to 100s because that is a freak event. That is price melted and went pro trend and it took 2 weeks to get there on a swing perspective. Yes, you can have that win. And if you held full volume, you could double your account. But how often is that happening? It's not a regular occurrence. It's a prime setup, a pro trend trade. That might be once a month. So stop optimizing for that. Optimize for the daily regular occurrences, which is you're going from liquidity pool to liquidity pool. What is the average range of that? On average NGU, it's about 25 pips. So if you know that you can be wrong, but if you just get the session volatility, you'll catch about 25 pips. Optimize for that. Don't optimize for the swing outcome, which is the best case scenario. The bell curve says there's going to be outliers where some of them reach that 1 to 100. There's going to be places where you don't reach any profit.
Yeah.
And in the middle will be the session volatility. Optimize for that. So have a partialing plan in place where you can take 50% volume at 1 to 3 risk reward. That's what we do. So your end target is a 1 to 10. And the swing target, just leave it. Forget about it. We're intra-session traders now. So you have a 1 to 3, you take 50%. At 1 to 10, take your remaining 50%. So a total win is going to net you 1 to 6.5 R.
Nice.
So you got 50% at 1 to 10. That's 5 R, and then 1.5 R from the 1 to 3, 50%. 6.5 R is your win. Now, you're going to have scenarios where you're taking a loss, that's minus 1 R.
Yeah.
You're going to have then the scenarios in the middle, which it doesn't reach the final target, but it's really often going to trigger that 1 to 3. You got a 3 to 4 pip stop loss. It takes 15 pips to get that 1 to 3 risk reward. That is just Asia range. So if you're going from London high to Asia high to Asia low liquidity run, that happens almost every day.
Yeah.
You have a correct model in place now to execute on that, which is super important. You're not going for Asia high to Asia low every day. You're going to have specific models. But when you have specific models, specific confluences, high probability, and then you catch a 1 to 3 risk reward at 50%, you're getting 1.5 R so often that it's almost a daily occurrence. Between 2 pairs and 2 session windows, you can catch a 1.5 R very frequently and still be wrong. You could have got price action completely wrong the whole day, but still netted 1.5 R. Now, the benefit of that is it really helps your psychology because you have been wrong all day. You might have been wrong all week, but you still banked something. So you've paid for your next loss, and you've also suppressed that emotion of, I've got to chase a trade, I've got to find a win, I'm in drawdown. All of these emotions that are regular, or the emotions that come with being wrong. Remember, it's factored in. Being wrong is factored in. But if you're still banking small wins, those compound over time. And from my growth that I've shown on the metrics that I've shown plenty of times, probably 80% of my profitability comes from that. It comes from accumulating the small wins. And occasionally, a few times a week, once or twice a week, I'll get my full target. And I was right. But that is not yielding the most of my profit. So when you realize on a 1,000 trade basis, you're optimizing for your portfolio, what is leading to the most profitability? It's not always being correct. It's being an efficient trader. Efficient meaning you're not optimizing for the trade, you're optimizing for the setup and knowing how to manage your profit. Risk management is one thing, and then profit management is a thing that people overlook. I think once you understand profit management, you can be a crappy trader. You can have a 30% win rate. You can be all over the place, but if you have good profit management, you can still find profitability or at least be break even. I think that is something that people overlook from that category of good trader to great trader. I think that's something people don't look into.
And this is just getting back to the question of like why we've never marketed this hard, is because just out of this question, I think we could be speaking all day about these small things of what's going to make you between an average trader to a great trader. So knowing this is because this comes with obsession, like with heavily obsession. Therefore, if we're just doing a course based on a nice smart money IFC candle, a break and a retest, and you enter, then majority of our time will be spent on marketing. But when you realize how obsessed we are with getting all these things together, because as much as we are 6-7 years in and looks a long time, when you start, you don't know anything. You're going to be 1 year deep and the year goes very fast and you're probably spending learning trend lines, for example, or break retest. There's so many things you need to learn that I personally feel, and I think Waqar feels the same, that after now 6 years is when I'm starting to feel that good moment of like, okay, now I know what I'm doing. You know, now I know all these profit target systems. I know how to not get my account into a minus 20% of my portfolio in 2 weeks. Like all these small things, and that takes a lot of obsession. Therefore, I believe that you cannot put everyone into this sort of pool of people, meaning traders, because not everyone's going to have this sort of obsession through it. Now, it's good to give them the opportunity, but you cannot trick them kind of like this is going to be this way and this is the lifestyle that I'm living, because we all know it's not the reality of it.
No, definitely. And there's one thing that you touched on there, Waqar, and I want to get your thoughts first, Alex, is you mentioned about, relatively easy to get 1 to 5, 1 to 10. you know, but the reality is people are going to hear that and they're going to say, this guy, what's he saying? You know, that doesn't work. It's not real. You know, it's not realistic. You know, and they'll be talking about, you know, 1 to 2 is the way, 1 to 3 is the way. So what are your thoughts on that when you hear, obviously you're doing it, that's number one, but then you hear obviously the thoughts of people saying, can't be done. The lowest prices in the entire industry with challenges from just $35 and payouts in as little as 5 days. The Expert Challenge is finally here. Get funded up to $100,000 at skilled funded traders. With unlimited trading days and 85% profit split, the Expert Challenge changes the game. Click the link below to get started today. I want to tell you about the best provider of tools for traders, and that is LuxAlgo. LuxAlgo is the largest provider of free tools on TradingView. You've probably seen them all over TradingView as well for their Smart Money Concept indicator, as well as so many of free tools on TradingView. You've probably seen them all over TradingView as well for their Smart Money Concept indicator, as well as so many other free resources. Now, if you don't know, they have also created exclusive toolkits to take your trading to the next level directly on TradingView. Whether you trade price action, ICT, or you want advanced signals and powerful overlays, they have all the tools necessary for you to grow. All their tools work on every market, so whether you trade Forex, crypto, or stocks, it does not matter. Now, through the podcast, you can get 20% off using the link in the description. So make sure you click that, and let's get back to the episode.
I respect everyone's opinion. I just feel that when someone is stating it can be done, it's a bit, you're trying to sell your stuff or your thing. So for example, if I sit here and say 1 to 10 is the way, 1 to 2 doesn't work, then I'm trying to sell my way, which in reality both can work. So my opinion to it is my experience. And my experience is that I was not able to be profitable with 1 to 2s and 1 to 3s. Maybe because I was doing 1 to 2s and 1 to 3s at the beginning of my journey. Therefore also I didn't have that market IQ and that knowledge that I have now. So probably if I get back now into 1 to 2s and 1 to 3s, I might be able to be profitable, which I didn't in the past. So my way I remember this, I think we were 3 years down the line, and I think that's when we actually were starting to get, 2.5 years, starting to get profitable, is because high risk to reward was able to cover my losses, because I used to be more like a swing trader. So that was able for me to cover those losses. So I thought this is the way to go. So my perception is basically my reality. My reality is my experience, what I've been doing for the last 6 years. So it's been kind of evolving like that. Now, saying doing a 1 to 2 doesn't work, I don't think is true. Like, I think it can work. Now, you're going to need to be right a lot of times. That's the only thing. And therefore, if you're not right a lot of times, most likely you will break even or lose money. So I think that you just need to be very good on your win rate, and that's it. But now, you cannot say also the other thing doesn't work, because that means that you have a lack of knowledge or you have a lack of experience on that field, which is making that 1 to 5 or 1 to 10 because your model doesn't represent that.
Definitely. What do you think? Do you think people, you said like people can easily do that. What are your thoughts in regards to that?
Maybe it's a bit of naive for me to say that it's easy. It's just more that, as Alex said, it's our reality, and it's not like I've done it once or twice. We've been doing it for years, and it's I want to say like, how can I show you? I'll prove it. If you need a track record, it's there. If a live trading session is there, if it's screenshots of entry to exit, is there. It's not a case of it's not possible. That's more of a projection of a limiting belief. But I do believe that there is misconceptions that lead to that belief. But there's certain figures in the industry saying it's outright not possible, and they are edified as, reputable names. That's also a very limited view of like something is not possible. But I agree that people can say it's not possible to be profitable with that. 1 to 10 is definitely possible, because the market at some point will move 100 pips, and most people can get a 10 pip stop loss. So that 100 to 10, 1 to 10 ratio is absolutely possible. But will that lead to profitability? That's where the doubt usually is. And that doubt comes from the industry marketing, the high risk reward as the holy grail. That is a big trend shift in the last 2 years we've seen. Since COVID, that became the buzz, where certain pyramid schemes, MLMs, whatever, they were pushing that. They were pushing smart money concepts. They were pushing high risk reward because it was different to the trend line norm at the time. The Fibonacci golden ratio, that stuff was the norm. The industry shifted towards that because high risk reward meant better, and they could sell that better. But that doesn't necessarily mean more profitable. And actually it can birth a lot of problems, which I can't touch upon. But the reality is, the high risk reward compensates for the losses. So you can have a lower win rate and still be profitable. If you want less risk reward, that's fine. You can be profitable. You just require a higher win rate. You find your balance. But the misconception usually comes where RR, risk reward, in their minds equals return on investment, where they see a 1 to 50 risk reward and people assume that meant 50% return. They risk 1%, they got 50%. That is, as I mentioned previously, that's a huge inefficient way of trading. If you hold out full volume at 20%, you're 20% up and you're not taking a partial, you're allowing the opportunity cost of that coming back to break even. So your risk reward to continue was, I'm risking 20% floating profit to try and gain another 10%. That's a negative risk reward. You shouldn't do that. Taking partials is healthy. You should do that. But then people market it as, I got a 1 to 50 and I full volumed it because it sells better or whatever. If you realize that no one's doing that, or they shouldn't be doing that, and there's a difference between risk reward and ROI, then you realize that the 1 to 10 that I'm speaking of does not mean 10%. It means on a best case scenario, 6.5. And I'm not risking 1%. I'm usually risking 0.25. So I'm super conservative in that sense. But if it comes to absolute disbelief that it's possible, then no, we can prove that.
No, exactly. I think it comes back to what you said at the start in terms of beliefs. People have the limiting beliefs. People have a lack of experience, so they might not be at that point in their journey where they've gotten the information enough to unlock that sort of door, if you will, and go down that path.
Just one thing also, it also needs to have a very systematic approach. Because I also understand that someone jumps and tries to go, like when we mention 1 to 10s, everyone knows that you're going to be needing to enter in a lower time frame, which is M1 or M5. Therefore, if you try to enter on every smart money candle on M5 or M1 just because a breakout structure happened, or just because you see equal lows FU candle, or all of these terms, of course it's going to lead to losses. Like you need to have a very big hierarchy, as he said, of like what's more important, what's less important, how can this setup that is a 1 to 10 be recurrent, because every day I can find you a smart money candle that leads to 1 to 10, but that doesn't mean that's a system that is profitable. It's two different things.
Well, that's what I was going to ask actually. It was a case where going through your journey, because I remember there was a time when there was like more emphasis on like high risk reward trades, like very high, like 1 to 20s, 30s plus, and then I've seen like the transition to where you guys are now, and it's a beautiful thing because it's like you can see it's very systematic, very much. This is, and as you've explained today, it's very much this is what we need. These are the numbers. This is the data. Everything. Was there a process then of obviously having to get to the point where you are now?
Absolutely. I think the mistake people can make by viewing us is thinking when we started posting. By the way, that's how we met. I was posting on Telegram to my 20 followers. Alex happened to be one of them. I was in a city. We met. That's the story of how we met. But the point being, that time when I was posting on Telegram for my friends and Alex was following, that wasn't me at my final form. And neither was it the year later, neither the year later, neither today. I'll be different in 2 years from now. The point to be is like, evolution is normal and growth is absolutely normal. So the things I was doing 3 years ago, 5 years ago, it would be weird if I was still doing that. It would show a lack of growth and improvement. But additionally to that is, I think it's pretty evident the market changes.
Yep.
There's no such thing as the market is like this and it will forever be like this. The world has changed, the economy has changed, geopolitical factors change, technology levels, AIs, these funds are investing billions of dollars into AI to have these algorithms to trade the market. It would be so naive to think that the market was the same 5 years ago and today. And what we've seen is when Smart Money Concepts was a bit more niche, ICT was the only kind of person talking about it and doing it. He had a niche audience. That's when Smart Money Concepts was very strong. And I remember I used to trade Smart Money Concepts, and 5 years ago, a very simple M15 FU candle, or whatever it's called these days, that was really reliable. And not trying to peddle anything, that worked. But I don't trade absolutely like that at all anymore because it doesn't work. That doesn't mean that it never worked. It used to work and the market adapted. Why did the market adapt? Is because when you had a trend shift of 90% of the industry now adopting these kind of concepts and way of trading, the algorithm, the market is going to change. Now you can go into the matrix thing and say, oh, the conspiracy side of the market is whatever. I don't necessarily ascribe to the market is out to get the retail trader. Just the numbers don't align. The retail liquidity into the market is a drop in the ocean. Specifically when you realize most of the liquidity is going through prop firms. Prop firms are not even executing in the live market. So you have no liquidity in the market actually. You have a closed loop with a prop firm. A lot of brokers will B-book you. So your positions are not even getting executed. So retail liquidity is so irrelevant that you shouldn't be falling for the belief of the market is out to get us. That matrix fallacy, I don't really ascribe to it. But there is absolute truth in the market is delivered. Price is delivered. And when you have to think about it, who's delivering or why they're delivering it, ignore that for a second. We've got to realize the market is delivered to fulfill a need, which is there are big participants in the market. And not everyone in the market is there to make profit. If China is buying oil from Saudi, as of now, they have to buy it in US dollars. So the Chinese party is buying US dollar to give it to Saudi, and then Saudi will exchange or hold it in reserves. That is a forex exchange. The currency exchange to USD. USD was demanded. No one was there to make a forex profit. They weren't playing that. They were using the currency. And you got to realize that the majority of the market movement is to that. It's geopolitical factors, it's trade, it's normal use of currency. And the people that are making profits and trying to arbitrage these movements, that is hedge funds and these kind of entities. And that is another portion in the market. Now, that is when a large order comes into the market, and the retail trader narrative is I have a deal with the broker. My trade doesn't need to be executed. Where I know that if price goes in my direction, the broker will pay me. If price doesn't go in my direction, I pay my broker. The market doesn't need to be there technically. It doesn't need to be executed. That's a B-book. But when it's a real life currency exchange, like in the airport, or like they say there's an oil trade going on, they need physical ownership of that currency. Now, how can you just randomly find $1 billion at a specific price point at a specific moment in time? That requires fulfillment of orders. There has to be an opposing party. If I want to buy, there has to be someone to sell. So that is no longer a broker deal. That is an official transaction. For that official transaction to happen, it's not always that there's enough liquidity in the market to fulfill these large movements. So that what price needs to do is it needs to go find these opposing orders. So it needs to connect people. So the market can see where there is buy orders, where there's sell orders. The algorithm can see these things. And the price is going to move to get that order fulfillment. And that's what liquidity runs really are. They are to fulfill, they're delivering price to fulfill the objective. That's my view on the market. I don't have too much view on that conspiracy side. I more stick to my strategy. But you see that delivery where London opens. Now there's trade going on during the day, and you really see volatility, movement go up. Like clockwork, literally London open, volatility starts. And what do you normally see? If price is overall trying to go bearish for the week, price might go bullish. Why? It's to grab some orders, grab some liquidity, trigger buy stops, and then you get all these manipulations happening. But that is simply to fuel the move down. Liquidity is the oxygen of the market. It's the fuel of the market. Price cannot move without liquidity and orders. There has to be that movement happening. So when you realize, well, that's a tangent. I think the most important thing to recognize for any trader to become profitable is you have strategies, you have confluences, but before any of that, learn to read price. Learn the language of price. Price has a language, and that language is liquidity. When you start to understand how to read liquidity, then you add things on top. Maybe add smart money, maybe add ICT, maybe add market structure, whatever you want to add on top. That's your defense mechanisms. Everyone has their different way of doing that, but there's also primary drivers of price. Everybody should know that. Once you know that, that's a solid base, and then building a strategy on top becomes a little bit more simple.
I believe that once you've bought, as Waqar said, 1-2 courses that are reliable, you don't need anything else. What you need is your own data. And the reason you realize, as the topic you were mentioning, how things can evolve and how the market can change is because you have your own journal. So if you have a journal, which is a true journal, where you have 6 months of data, and you can see actually that, okay, so this setup was playing through, let's say, a whole year. Now it's giving me losses. You cannot make a decision out of a month. You need data in there to back up. Okay, as Waqar was saying, so 2 years ago, this used to work as pretty good. Now it's not. What's happening here? Oh, now it's usually making a run of liquidity. So now can I still enter? Okay, now let's dissect into can I now find a model that repeats in the market? Now I'm not going to implement that model directly into my account. I'm going to test it. So all these things is what needs to be done, and that's the only way I believe you can stay profitable also for a long time, is having a strategy, but also have that critical thinking of your strategy, of thinking, are things evolving? Are things okay? Is things going wrong over a long period of time? Not like 1-2 weeks, but like over a true period of time. All these things.
Do you feel like most traders have a too short a time horizon? Absolutely. Yeah, they're thinking way too short term versus, as you say, the 6 months minimum, and beyond that, really.
Absolutely. I think it's right now the way I believe technology is evolving, how all we are grow up in more advanced moments. Like right now, if you want to eat, right now, I just order something, in 20 minutes it's at your door. All these small things that are just making the economy, our life, just quicker, like instant things, like social media, connecting with people. It's just making subconsciously ourselves to be on that feeling of like, if things don't happen overnight, I'm having that feeling of anxiety because it looks like I'm not growing. When in reality, like trading is going to take a long period of time. Anything that is worth having takes a long period of time to get built. So I think it definitely will have an effect on that.
Using your same analogy there, it's like the food. You can order food 20 minutes. What's it more than likely going to be? Fast food, right? So yes, you can eat, and it might sustain your sort of dopamine and your hunger. But then if you want a quality meal, it's going to take an hour and a half. But that's the sustenance and the quality of that meal is going to be much higher. But it's still, even that, with that analogy, obviously, it's still half an hour, etc. Would you say, kind of just a little pivot there? Would you say Dubai, though the positives are there in terms of network, etc., but we all know that Dubai is very efficient. Would you say there's almost a negative there because of how efficient it can be, taking away a lot of responsibilities that we don't?
It's like throwing blanket statements of social media is bad, or television and movies is bad, Netflix is bad. They can all be bad. It's just how you use it. If you have no impulse control to anything, everything's bad. Even water can be bad if you drink too much. You probably throw up. Anything could be bad if it's done incorrectly. So I think with that too, like you can throw yourself into Dubai lifestyle and have no impulse control and end up in 5 Palm every day and blow all your money. That can happen, but you just don't be an idiot kind of thing.
That's true.
But your point of that horizon, the timeline thing, if I was to boil down the top 3 traits for a successful trader, that would be one of them. Delayed gratification and extending your timeline. No one's going to make profit in the first year, so don't even try. Think on a 5 to 10 year horizon and you'll be on track. Second, I think, is impulse control or emotional flexibility. If you can really, that gap that we were talking about, the psychology gap between backtesting and real life, that psychology gap, it comes down to impulse control and emotional regulation, management, and flexibility. That is another key one. And then extending your time horizon, delayed gratification, that's another one. There's probably 5 more I could list, but those 2 are super important to manage. So to your question, yes, it's probably one of the most important things.
Also building self-confidence, I think, in yourself. I think it helps for everything, not only for trading, but I think how you do one thing is how you do everything. Therefore, if you are a person that everything that starts, you quit, again, it comes back to the subconscious mind of like, you don't believe in yourself because everything you start, you fail, or you don't finish until the end. That's why, for example, Waqar could have actually quit his degree the last year of dentistry, but he thought, no, let me finish it because I know that it's good to have that badge of honor or whatever we want to call it. Same thing happens with the gym. So this is the reality. Like, a lot of people are not able to go consistently to the gym. And I had a period after playing football where I actually follow that route of actually not going to the gym. I started to get a bit fat, even though you couldn't see on the screen. I started to get like a bit fatty and stuff. And then like 8 months ago, I said, there's no way, like this is not me. This is not how I've been always operating my whole life. So I go back in track. I'm not missing a day. Maybe I do 5 to 6 times a week. Again, I'm not going to the gym to compete and become a bodybuilder. I just go to the gym to get my 30-minute walk, just moving myself, 30-minute walk, and then some weights. But all of these things, once you are able to go in track and be like, okay, I'm being healthy, I have my actual routine, I'm eating correctly. Like all these small things are ticking on your box of becoming a better version of yourself. And when you become a better version of yourself, you're gaining confidence on yourself. So you can believe now you can become profitable if you're not profitable. You can believe you can achieve bigger things in life. So I think it's all comes down to all these building habit systems.
So like off the back of that then, would you say it's so important to be able to trust your own word? If you say something like, okay, I'm going to make sure I consistently backtest and be following the markets live, like you said earlier, for 6 months, and then you fall off after 3, your mind has just listened to yourself and said, you don't follow through with what you're going to say. But the more you actually then do that, where you actually follow through with what you're going to say, and you start to see the results of that, the easier, well, I don't want to say easier, but the more it becomes easier for you to accept your word and actually trust your word as an individual. So is that kind of what you're saying there?
So there's a couple of things. So for example, something that I've realized is that when someone buys a course, mentorship, or like starts this new me, okay, they're all super excited and they're trying to do now. For example, you are a super sedentary person, meaning like you haven't moved yourself in the last 5 years, and now you try to go to the gym like you're gonna go and compete on bodybuilding, or you're now trying to go on 1 hour runs. Like this doesn't work like this. You know, you need to build yourself slowly. So even if you're a super sedentary person, you can start as small things such as like going to the sauna 4 times a week. Like all these small things to build yourself up. So now same happens in trading. If you never watch more than 4 hours the charts a day, you cannot jump because you're excited and watch it for 8 hours. You're gonna get burned. You're not gonna be focused because probably the 8 hours, 6 are thrown away. So it's better to always build yourself gradually. So if I'm not used to watching the charts, let's just watch London and New York. You build yourself for a bit. Now when you're used to it, now you add more hours. The more hours is start journaling. So now every day you do that session of London, you do New York, and you journal. And slowly you gradually add same in the gym. So everything needs to grow gradually, and therefore that's how you actually also maintain it over time.
Yes.
So, yeah.
I think you nailed it. If you were to define confidence, the best way, the analogy I can think of is like if you separate yourself and think of yourself as a friend. If I had an agreement with Alex that we're going to go to the gym every day at 10, and every day he didn't show up, I think he's a shitty friend, or I think like you're not reliable. So it's the same to yourself. If you say to yourself you're going to do this and then you just don't do it every day, you're having that internal dialogue subconsciously of like you're not reliable. Confidence comes, Hormozy said it best, confidence comes from a stack of proof. You have a stack of proof to show you are who you are. So if you always are a man of your word, you do everything you're supposed to do, that over time will build your confidence. And therefore confidence in the market comes from a stack of undeniable proof that you are a profitable trader, that you have an edge, so that when you've built your system, you've built your strategy, you've defined your edge, and you have confidence because you have a stack of proof, your confidence will come into the live markets. But if you buy a course and you learn some things and you take someone else's word for it, you don't have any confidence there because you didn't see it time and time again. You don't have that stack of proof. You just have someone's word for it. So when you come to the live market, you have no confidence, therefore you act irrationally and recklessly, and you just mess it all up. And that's why we've always said now, the most important thing is not mentorships, it's not courses, it's market experience, market IQ. Because there's no supplement for that. You know, the way I like to look at it in life, there's 2 kind of things. One is like solved by money, and the other thing is not solved by money. And the markets, Forex, is not a solved by money situation. What I mean by that is the things that are not solvable by money is your mental health. You can't pay your way to having good mental health. You want to have a good relationship with your parents. You can't pay your way to have a good relationship with your parents. And then there's other things you can pay for. For example, if you want to fly or travel more conveniently, you can pay from going to a bus to getting a chauffeur. You can pay from going Ryanair to a private jet. That will solve that problem of getting there faster or more comfortably. Money can solve certain things. Let's say you're in a business and you're lacking talent in how to market. You hire a CMO. You lack experience, get a consultant. And another thing that is not solved by money is going to the gym. You can't pay your way to a good physique. You've actually got to go to the gym. Now, that's a good analogy because there's shortcuts there. You can pay to get a coach or a PT. You can pay to get a nutritionist, and you make your outcome more likely or more steady. And the market is like that. You can't pay someone to teach you. despite what people think. You can pay someone to be like your coach, where he will tell you what exercises to do. You can pay your nutritionist to tell you what you should eat, but then you got to go and do that workout and eat what you're supposed to eat. And if you follow your nutritionist and you have your meals, but then at the end of every day you have a chocolate bar, you did what you're supposed to do and you did some things you were not supposed to do. The market is the same, where your mentor, your coach, whatever, they taught you to do these kind of trades, but then your emotions made you do other kinds of trades. That's the same of like trading profitably and then throwing reckless trades on top. Is like having broccoli for dinner and then having a chocolate bar at night. You're not managing things correctly. So the market is not a money solved issue. Money will help you get to the right direction, like paying for prop firms will help you get capital. Paying your mentor will help teach you, but then you got to do the work as well. Like no one's going to do the workout for you. No one's going to do the back testing and market experience for you.
Yes.
And I think that dichotomy there is what people try and solve with money, where you are facing losses. Therefore, you automatically assume it's my mentor. I lack knowledge. I need more complexity. I need more knowledge.
Yes.
Or I'm not profitable. Therefore, I need to go and buy more courses, as opposed to do introspection and realize maybe the issue is you.
Yeah.
And usually that is where you have the most breakthroughs.
Definitely. And what I'm going to do now is I'm going to throw like quick fire questions at you, because I have a few in my mind. One being, though, that kind of relates to what we were just talking about there. Just like your analogy with the friend, for example. I have always been under the belief that everyone knows exactly what they need to do what they want to achieve. So like with trading, let's take trading as an example. I think every person out there knows exactly what they need to do, almost, in terms of what a successful trader looks like, you know, what that successful trader needs to do to be successful, but they just don't do it. In terms of like, what I always say to people is, envision in your mind you as a successful trader. What does it look like? Where are you? How are you trading? You know, how are you emotional? Or are you controlled? And like they know exactly what it looks like, but they're just not being that person. What are your thoughts on that sort of statement or thought?
Yeah, you know that saying of like, you can take a horse to water, but you can't make it drink. It's true, but it's also not true. Where if you make that horse dehydrated and tired and hungry and whatever, it's probably going to drink that water. So the problem is not, everybody knows what to do, but why don't they do it? It's because of usually it's their circumstance, where a lot of people, if they're in a comfortable job where they kind of like it but don't like it, but you know, it's all right, it pays the bills and they can get by, that is, I think, a worse situation than someone who is on the poverty line that has no way out. Because that guy who's in the job and is stable and has a mortgage and has family, whatever, what's really driving him to take a risk of now leave my comfortable job where it's not too bad, but I have to pay my mortgage and stuff? They're more likely to stay. So they are not that starving, dehydrated horse. They're just a horse that's gone to water. But the guys who's on the poverty line, who really needs to make it work because they're dehydrated, because they're hungry, like the horse analogy, they're the one that is galvanized enough to really take action. So I think a lot of people's situation, most traders are from the West. Most traders are not in poverty. Most traders are young dudes, actually young guys who have rent paid for by their parents. They're living at home, they're students, they've got a good income. No one's really struggling. So I think that setup usually leads to people not taking action. Now, that desperation is one fuel and inspiration is another fuel. And the person that is now taking action because they have the right, they have a passion for it, they have the right intentions, they chose this route for the right reasons. Those are the people that are not required to be galvanized on the poverty line. Those are the people that will take action because they have good skills, traits, and beliefs. So you either have the extreme desperation or inspiration coming from those three factors.
Definitely. And I'll throw one to you, Alex, in regards to, I think people have a fantasy. We've kind of touched on it today in regards to people like throwing money at a new mentor or new education just because they hasn't worked for them in a short period of time, wherever it may be. And I think people have a fantasy that one day they'll pay for a mentor or a course, or they'll learn something that will make trading easy, right? They'll be able to just look at the market and go, it's going to go here, it's going to go there. As someone with experience, as someone who is profitable, would you say trading is easy for you now?
Well, I think it has become easier over time, but I think it's led to also through the experience of knowing that I'm gonna lose and I'm gonna be wrong in the market, I'm gonna be right in the market. So I don't think it's easy. I think every day I show up, it takes full focus of myself. I generally don't know how to do it on the side. Like I have to properly sit down, be focused, not have my phone and all of this. So that's why I don't think it's easy, right? For example, if I compare it to football, probably like any football player that's playing on the Premier League has over time playing on the league, it becomes easier. Now, that doesn't mean they jump on the pitch and they're just like chilling or walking, because then it's not going to work, because they're going to eat you, right? So I think it's the same way. So yes, it has become a bit better or more comfortable to understand the feelings behind of all the psychology side.
Yeah.
And the technicalities behind it. Of course, I've got more advanced, but I believe it still needs a lot of focus on my day-to-day basis.
Yes.
I am the type of person that, and I've realized, like, once I don't have a routine in place, it doesn't work for me. It just doesn't. Like, I know people, and I've met traders that's very good, and they just have like a shit routine. Like, when I tell you shit routine, it's like genuinely, like, I cannot believe it. Like, from the food, from everything. I met an Egyptian trader that he trades for a family office here in Dubai, and I think he's managing, I think just on his side is like 30 million or 40 million himself, and he's just partying. Genuinely, like, he's partying, going out every single day, because you can party once a week, you know, but when your whole life is around partying and eating on restaurants and this and that, and he's banking 20-30% a year.
Wow.
He's boss of the family office, all happy, and he's still profitable. Now, that doesn't work for me. Like, I've realized I have periods in my life where I've partied more or go out more, and it just doesn't work. I am not focused. I need to have my routine of going to the gym, of actually being there, being present, not being hungover, not being even like, I don't know, around with other things. I just know how to focus on one thing. So
No, definitely.